Before we jump into the video, guys, let's take a moment of silence for all the paper hands who died around $51 and some change. Because if you fell for it, well, there's nothing I can tell you. And you've seen this, we've been through this multiple times, right? Strong support around 52, and then it bounced back, okay? It bounced back, and actually by looking at this, this is a high jump of almost 12% intraday. It tells you how powerful the whole movement and the buying pressure, people buying and holding this thing because they know, all right? They know. Well, I'm hearing that the move from 52 to 58 today might have been the result of failure to deliver from last May. Well, I'm not sure exactly if that is wrong or no, but it doesn't matter because bottom line is we close on the green, okay? Showing that we are still in this consolidation phase, consolidation phase around the 50-ish, 50-ish before we actually rip, because there is a strong resistance, all right? A strong resistance before the whole $63, $64 a share. And the hedges know. They know. And as a matter of fact, the big news today is coming from White Square Capital. Hedge funds closes after suffering losses investing in GameStop, all right? So the London-based hedge fund White Square Capital has told investors it will be closing down, a move that follows double-digit percentage losses from a bet against GameStop stock, according to the Financial Times, all right? The hedge funds made the losses in this year's first so-called meme stocks rally in January, but later recovered much of that last ground, the newspaper said. It said the decision to shut the fund resulted from a review of White Square business model rather than from the GameStop rally. Well, blah, 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 whatever you want to say, guys, but it is what it is, right? You got burned into GameStop. I mean, just admit it. There is nothing wrong with admitting your failures. You thought it was a home run. You went at it, maybe all in, and then boom, it didn't work out, and now you're out, all right? It's simple like this. Well, this is good news, but it's not huge news, all right? I mean, I don't want to be spreading further out there or maybe, lowering your expectations. No, I just want to be realistic. This hedge fund is not to the same size of Citadel or even, a Melvin Capital. No, this is I think at the top they were managing maybe $440 million. So it's not even $1 billion shop, all right? So this is what we want, all right? Because as I mentioned earlier in my videos, the result of the short squeeze will be a result of a cascade of events. And before we get to margin calls and liquidations to the big dog, which we all know is Citadel, before we have such minus or little, hedge funds or family offices that need to go out first, because that is how we'll get those shares being bought back when these guys are being liquidated because they can't afford anymore to continue to lose money, all right? But ultimately, this gives you an indication of where we are going, okay? Before we get to Citadel, ultimately, it will also come to Citadel because, as a matter of fact, we have a new rule that I mentioned yesterday and during the weekend that will be effective, I believe, market close tomorrow. There was a huge expectation because this is a big rule. But guys, as always, I want to expect I'm expecting for the best, but I'm also preparing for the bad. And that being said, we don't know exactly how this will impact the share price, but at least it's a huge advancement towards those hedges getting margin calls and being kicked out. All right. So this is all for this video. I'll see you in the next one.